Hey, option traders. Arbor Realty Trust is the #1 ranked stock in the mortgage REIT group and also pays a healthy dividend of 7.3%. The company boasts pretty strong ratings with a composite rating of 88, an EPS rating of 80, and an RS rating of 85. One way to take ownership of a stock for less than the current price is by using an option strategy called selling cash secured puts. A cash secured put is a slightly less bullish trade than buying the stock. It's considered a neutral to slightly bullish trade. The cash secured put involves writing an at the money or out of the money put option and then simultaneously setting aside enough cash to buy the stock. The goal is to either have the put expire worthless and keep the premium, or be assigned and acquire the stock below the current price. Selling put options is an easy place for investors to start with options. They're very similar to covered calls and are pretty easy to understand once you know the basics. So traders selling puts should understand that they may be assigned 100 shares at the strike price. Now let's take a look at Arbor Realty Trust and set up this trade together. So we're on my Thinkorswim dashboard. And first thing, to set up this trade, you're going to type in ABR, which is the ticker symbol for the stock. We're going to be looking at the single strategy. So if you're on Thinkorswim, you just select single in this box right here. We're going to be looking at options contracts that expire the week of April 14th, 2022. And we're going to be looking at this strike price right here, 17.50. And you're going to want to be looking at this side of the screen, which shows the prices for puts. This option was trading for around 75 cents yesterday. An investor selling this put would receive $75 into their account, which would be theirs to keep. If ABR falls below $17.50 by April next year, they would be required to buy 100 shares at $17.50. The effective net cost of the position would be $16.75 thanks to the option premium received. That's roughly 12.4% below yesterday's closing price. If the stock stays above $17.50 at expiration, the put expires worthless, leaving the trader with around 4.5% return on capital at risk. That works out to be roughly 8.9% annualized. The main risk with the trade is similar to outright stock ownership. If the stock falls quickly, the trade will suffer a loss. However, the premium received will help to offset this loss. The maximum loss on the trade would occur if ABR fell to $0, and that would see the trade lose $1,675. But most traders would cut their losses long before then. Cash secured puts are a great way to generate a return on strong stocks, potentially without ever having to take ownership. So if the put does get assigned, then the investor takes ownership with a reduced cost base and can potentially begin selling covered calls to generate additional income from that position. Conservative investors may prefer to wait for a pullback in ABR stock before selling puts. And there you have it, your option trade of the week. Remember that options are risky and investors can lose 100% or more of their investment. So make sure you practice with a virtual trading account before risking any real money, especially if this is new to you. And check out investors.com/options for more option trading tips.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.